Welcome to yet another brand new XRP video, guys. And take a look at what I have for you right now. The XRP lawyer, John Deaton, is skeptical about the XRP XE settlement. The legal battle between Ripple and the United States Securities and Exchange Commission, SEC, has entered a vital. Recent developments reveal that there is a complex interplay between a numbers of high-profile cases in the cryptocurrency business. In a recent interview on Thinking Crypto, attorney John Deaton, who is widely recognized as a prominent player in the field of crypto law, discussed his thoughts on the Ripple issue. The viewpoint of Deaton sheds light on the SEC's unwavering opposition to Ripple and its unwillingness to reach a settlement, particularly when viewed in the broader context of the Commission's response to other cryptocurrencies such as ADA, Sol, and Matic. In its complaint against Coinbase, which was filed in June, the Securities and Exchange Commission categorized these cryptocurrencies as securities. The SEC said that the exchange had operated without the appropriate registration and had facilitated trading in assets that it believed to be investment contracts. This new revelation has important repercussions for Ripple, particularly in light of the decision made by a federal court in New York in July that XRP is not a security and that Ripple's sales and payouts do not constitute investment contracts. Legal professionals continue to speculate about the prospect of an appeal to the SEC or a settlement with Ripple, despite the fact that this remains the case. The future of Ripple depends on the legal outcome made by Coinbase. The attorney Deaton is of the opinion that the outcome of the Ripple case may be significantly impacted by the legal struggle that the SEC is now engaged in with Coinbase. According to Deaton, a good outcome for Coinbase might ultimately lead to a settlement in the case that Ripple is currently facing. Coinbase submitted a request to dismiss the charges brought by the Securities and Exchange Commission in October. The motion brought into doubt the SEC's power to oversee the cryptocurrency industry and challenge the classification of the traded crypto assets as investment contracts. In the Ripple case, the ruling on this motion, which is anticipated to be made early in the next year, may establish a precedent. The action against Ripple, which is presently at the remedies stage, is predicted to move forward in the month of February. The final verdict will determine the next step that the Securities and Exchange Commission, SEC, might take, which might be to reach a settlement with Ripple or to challenge the summary judgment in the Second Circuit. The intertwining of these lawsuits highlights the intricacy of the regulatory framework for cryptocurrencies, as well as the dynamic posture that the SEC is taking on digital assets, the Ripple versus XE case indicates a change in cryptocurrency regulation. The dispute between Ripple and the Securities and Exchange Commission, SEC, is a barometer for the regulatory atmosphere around cryptocurrencies in the United States. This case has direct ramifications for Ripple and XRP investors, businesses, and legal experts are keeping a close eye on the approach that the Securities and Exchange Commission SEC takes in these high-profile cases. This is because the SEC stance has the potential to dramatically impact the future of cryptocurrency regulation and the classification of digital assets. It is possible that the outcome of these actions, particularly the litigation against Ripple and Coinbase, will provide much needed clarity on the regulatory bounds of the SEC, as well as the legal status of other cryptocurrencies. The conversation on digital asset regulation continues to be shaped by the conflict that exists between regulatory monitoring and the dynamic character of the cryptocurrency market. This tension is occurring while the sector waits for these critical verdicts. According to recent court filings, the cryptocurrency exchange, Kraken, has taken a critical step by filing a motion to intervene in the ongoing legal struggle between Ripple and its plaintiffs. This action is one of those significant moves that Kraken has made in response to a court order that has ordered all U.S. exchanges to provide private trading data and the identities of clients who transacted in Ripple's XRP with the legal team representing the plaintiffs. Kraken has taken this measure. Privacy protection for the customer in the letter. The exchange claimed that although it does not oppose the long-form notification that was recommended by the lead plaintiffs, Kraken is concerned that its customers may misunderstand the company's compliance as support for the case that Ripple is bringing against it. The company emphasizes the importance of preserving its reputation and the trust of its users by asserting that it has the right to clarify its position from the perspective of its customers. Through its intervention, Kraken intends to guarantee that its conversations with customers will continue to be unfiltered and open in the midst of the continuing legal dispute. More in-depth analysis of Ripple's legal problems, the question of whether or not XRP ought to be categorized as a security is at the heart of the legal dispute that is taking place between Ripple Labs and a group of plaintiffs led by Zakina. The complaint asserts that Ripple carried out an unregistered securities offering, which is an allegation that Ripple refutes by arguing that XRP is comparable to other cryptocurrencies such as Bitcoin. As the lawsuit progressed, a court order that demanded that exchanges in the United States disclose the XRP trading information of their customers prompted concerns about users' privacy. Exchanges in the United States, such as Kraken, are in a precarious situation since they must strike a balance between complying with regulatory inquiries and protecting the privacy of their customers. Since the middle of December, the price of XRP has been below 64 cents. This is due to the fact that the market is in a state of uncertainty on the prospect of a correction occurring before the celebrations of Christmas and New Year. As a result of the consistent upward trend that began in the middle of October, investors are likely to consider cashing out. As a result, they would be able to make a profit from the gains that have been accumulated while simultaneously trying to make additional purchases before the Securities and Exchange Commission gives its approval for spot Bitcoin exchange traded funds in 2017. The price of XRP continues to maintain its position above the 61 cents and 60 cents support levels as bulls fight to maintain the uptrend. In the event that the token of the multinational payments giant causes a sell-off below 6 cents, it is possible that XRP will advance through the local support level at 58 cents prior to the subsequent breakthrough. Following a 160 increase in 2023, the price of Bitcoin is expected to reach a new all-time high in 2024. XRP price prediction. Is it possible to make money off of dips? Beginning with the 20 exponential moving average, a exponential moving average, even an essential moving average, the most prominent international money remittance token is positioned above all three major indicators. In the event that these support zones remain intact throughout the celebrations that are scheduled to take place over the following couple of weeks, the bulls will not face an intimidating challenge in their fight to get closer to $1. Furthermore, the ascending trendline support is in a position to prevent additional losses from pulling down XRP. Nevertheless, if it is broken, the fall might be rather severe. Chart for predicting the price of XRP chart. For predicting the price of XRP and trading it now. The moving average convergence divergence divergence that buyers may swiftly give up territory to bears if they continue to hold steady. Take note that any indication of a fading upswing could potentially frighten holders into selling in a panic. When the blue MACD line crosses below the red signal line, this would be an indication that a sell signal is approaching. Before taking short positions, traders need to make sure that the indicator is generally moving in the direction of the neutral zone into the negative region. In order to legitimize the upswing and open the way for gains that go beyond 64 cents, it would be extremely beneficial if there was movement above the immediate resistance level at 62 cents. For XRP, indicate that the technical structure has improved and that a breakthrough to $1 is on the horizon. It is necessary for the cryptocurrency to overcome the seller congestion that is now present at 64 cents. Investors who are considering adding Cardano OA to their cryptocurrency portfolio may want to stick with the latter option. XRP is an alternative that investors may be considering.